Is BRICS expansion an accident or a systemic process reshaping global currency dynamics? You are a global investor tracking international markets, allocating across currencies and assets, believing diversification secures long-term returns. But what if BRICS growth contributes to mechanisms that shift reserve currency status and influence dollar dominance? Today, we're analyzing BRICS currency shift, the macroeconomic mechanisms of de-dollarization that affect global investors through trade and reserve changes. The data reveals the truth unmistakably. BRICS GDP PPP surpassing G7 in 2023, trade in local currencies up 85% since 2022, dollar reserve share below 59% while new members join, and payment systems expand. Stay with me to the end. This isn't isolated events. It's the clear analysis and path to financial independence that could help navigate these shifts. The explanation provided and experienced by global investors like you is that dollar dominance is structural, with alternatives limited by network effects and liquidity. That BRICS efforts are symbolic, not fundamental threats to reserve status. But look closer. Why do BRICS nations increasingly trade in local currencies, reducing dollar reliance for energy and commodities? Why do new members and payment platforms accelerate non-dollar flows? Why does multipolar currency raise questions when dollar share declines steadily? The Insight 1. The system doesn't need sudden collapse to shift. It only needs gradual trade realignment to reduce single currency dependence over time. This isn't isolated events or unavoidable friction. It's a systemic process rooted in geopolitical mechanisms that influence reserve dynamics through trade transmission. BRICS isn't just bloc, it's the mechanism that affects global asset allocation. Russia, China trade 90% non-dollar, India, UAE rupee settlements. Brazil, yuan deals. The result? Dollar demand softens, alternatives grow. For global investors believing dollar safe haven, the reality is clear. The mechanisms have been developing, influencing outcomes over time. Intriguing? Yes, but who are the key players in this BRICS process? Who are the key players in this BRICS process? So you know you're not missing the bigger picture. It's not abstract geopolitics alone. It's BRICS nations and emerging institutions who shape outcomes through trade and currency initiatives. Picture them as established participants in the global system, advancing local settlement while you, allocating across currencies, navigate the resulting diversification. The process works through network effects. Trade in local currencies reduces dollar intermediation, payment platforms bypass SWIFT, institutions get alternatives, flows shift, global investors feel effects later currency volatility, reserve rebalancing. Deep dive. Post-2022 sanctions, Russia trade non-dollar surged. BRICS plus added Saudi, UAE, Iran energy producers diversifying. Real-world impact. Investors adjust portfolios, hedge dollar exposure, seek alternatives while policy supports multipolar flows. It's continuing. Current signals, BRICS summit payment system proposals, local currency bonds growing show process ongoing. Saifedean Amus notes, reserve status follows trade. Lynn Alden notes, de-dollarization accelerates with alternatives. Insight 2. Dominance doesn't end overnight, it erodes gradually as trade networks realign. History's pattern is clear pound decline post-World War II, dollar rise post-Bretton Woods. These players shape outcomes as global flows diversify, but understanding the process is the first step gaining clarity. Now explore the mechanisms at the core BRICS currency shift, so you see exactly how it affects global investors allocating capital. It starts with trade realignment. Sanctions require alternatives. Local currencies grow. Cycle continues. Payment platforms develop. Bonds issued. Visibility activates. Non-dollar flows increase, reserve shares adjust. Institutions get options, diversification rises. Investors pay with portfolio rebalancing. Everyday impact, currency pairs volatile, dollar assets repriced, hedging costs rise. History shows pattern. Post-1971 petrodollar strengthened dollar. Post-2022 sanctions accelerated alternatives. Current signals indicate continuation. BRICS trade volume growing, local currency settlements expanding. An insight 3. The system doesn't require confrontation to change. It only needs practical alternatives to reduce reliance over time. Lynn Alden notes, trade drives reserve currency. Milton Friedman, money follows goods. Insight 4. Diversification isn't speculation. It's response to shifting trade incentives. The process isn't isolated, it's systemic, influencing global opportunities over time. Think of it as trade flow, your allocations navigating broader currents. But here's the pivotal shift. You don't have to remain affected by this BRICS currency shift process. Stop navigating as part of a single currency current. Adopt the independent mindset. Understand the mechanisms, then position strategically. Conventional approach, dollar core portfolio, leaves you in the flow. Your returns influenced before fully realized. Redirect instead. Question every reserve dominance narrative. The clarity comes realizing flows diversify from BRICS mechanisms, gain independence, auditing exposure to single currency. Insight 5. Protection isn't predicting winners. It's allocating to assets outside any one system's control. How much portfolio in dollar-denominated assets? Shift to independence. Preservation outside processes reach. Took history shows affected stay in current. Independent thrive, preserving value across shifts. Practical step. Minimize single currency exposure. Prioritize hard assets resisting central influence. Insight 6. True global independence isn't choosing sides. It's owning what no policy can dilute. You're no longer in the flow. You're the one charting course in diversifying waters. This isn't avoidance, it's pure clarity. You're positioned to turn mechanisms to advantage, emerging stronger from shifts. This is your initiation into true clarity, the deliberate path to financial independence from BRICS currency shift mechanisms affecting global investors. None of this is financial, investment, or trading advice. It's purely educational macroeconomic analysis for awareness. Always do your own research and form your own conclusions. Bitcoin is digital gold, limited to 21 million coins forever, halving every 4 years. No one can print more. It's impossible to confiscate like 1933 gold. History has proven it outperforms every traditional asset class during fiat stress cycles, with multifold appreciation post-halving, such as over 10 times gains after the 2020 event amid unprecedented printing. The 2024 halving cut new supply issuance in half again, with 94% already mined, making it increasingly scarce over time, the only asset truly immune to inflation by design. In eras of currency diversification like today, this fixed supply property has positioned it as the ultimate tool for wealth protection, preserving value when reserve shares shift. Start your initiation. Read The Bitcoin Standard by Saifedean Ammous for the fiat parallels that will blow your mind, or The Sovereign Individual by James Dale Davidson, mapping the shift to individual sovereignty. Follow thinkers like Ben Cowan for cycle data, Lynn Alden for macro signals. It's actionable. Self-custody wallet, consistent dollar cost averaging into Bitcoin as your neutral anchor. This is the key to viewing money as your servant, not master. If this analysis has brought clarity, the drive to secure true independence commit now to the next layer. Subscribe as your mark of joining this community of financial clarity seekers decoding the system together. The next insight is waiting.